Welcome back to India Decides at 9. Well, the Cabinet has cleared the direct tax code, so it should soon be law. We are being joined now by Mr. Subhash Lakhotia, one of the country's top tax experts. Thank you so much for joining us to help us understand what exactly this is all about. Now, when we first heard of the direct tax code last year, it was a rather radical document, massive, much higher tax slabs, Provident Fund was going to be taxed on withdrawal. There were all sorts of radical proposals. What we now seem to have is not very different to what the present tax regime is.
Definitely, what you say is absolutely correct, because what was there in the original draft direct tax code, some of them were worried, some of them were excited were those taxpayers where they found that the slabs are going to be very encouraging. Income tax just 20% up to 20 lakhs rupees. Now all those things gone, same steady, whatever is the slab right now, little bit here and there, but nothing very spectacular or something very specific or very strange or unique, no. Only good thing is now that taxpayers are now relieved. Oh, no tax on the Provident Fund, no tax on PPF. Those are the good things, I would say.
Okay, so some of the things they were worried about are not there anymore. There were also some worrying, from a taxpayer's point of view, I guess, slightly worrying noises on capital gains in the original draft. Have we heard anything about that yet? Are they going to be taxing long-term capital gains?
In the original, there was something different, and when it came to the second draft, then there was something very complicated formula. And now what we just hear is, there is no change. I personally feel that as the tax slabs have not been radically changed, the tax with respect to the capital gains will be as it is. That means no capital gains on long-term capital gains, and also just 15% capital gains on short-term capital gain.
So you're expecting that even that's not going to change?
Yes, that's not going to change.
Some of the exemptions they were going to phase out, it looks as if they're also going to stay, like for example on housing, the interest. So that
yes,
again,
housing is going to stay, because now government also feels that yes, 1,50,000, we may not increase it, but at least that should be given to have a good housing interest deduction. And likewise, 80C, the present 80C, that would continue, but instead of 10, 20, 15 items available in your basket to choose, you will be able to choose only from 4 or 5 items only. That's it.
Okay. So at the end of the day, I think what we can say about this is that it's no longer as radical as it was earlier. The major difference, I guess, would be that the code itself will be simpler for people to understand. It will be not 3,000, 4,000, 5,000 amendments. It's a simplified document for today.
Yes, this is what we expect. Not that again now we have the Act, and again in April or February we have the amendments to the Act. If that comes, then it will be just no use. Likewise, there should not be separate income tax rules. For example, salaried taxpayers, Income Tax Act does not contain much. Even the Direct Tax Act or bill, if it contains not much about the salaries, and they are all going to be discussed separately in the income tax rules, then the taxpayers will have a tough time.
All right, sir. Thanks a lot for joining us. So some of the things that you might have been worried about are not there. Some of the things you may have been excited about are not there either. So it's a slightly less exciting document than it was at first glance.